This is our currency meter for today. One of the easiest ways of trading is to find super strong ones and trade them against the weak ones. You can see today at 4 o'clock the pound was extremely strong for about 4 hours in the direction of the weekly and monthly trend. So one good trade at that time would have been to buy the pound versus a weak yen, and keep in mind the yen has a weekly and monthly trends down. You would have also wanted to possibly look at the dollar if it wasn't so strong. So a little bit later at 8, when it did become weak, the pound was no longer the strongest one, and you might have traded a different one against the now weak dollar. But at the time, the yen was obviously weaker than the very strong dollar, and you would have wanted to buy the pound yen. So here's the chart after 4 o'clock. Notice here's 4 o'clock when our software showed it was strong. The weekly and monthly trends up, and a lot of times when longer term trend is up and you get a counter trend move down, this one hit the 50-day moving average, the previous day's low, and our lower containment band. It gave two counter trend buy signals right here, and the weakness on the way down was barely nothing. Especially on a tick chart, you might have got into this trade and this would have been your anticipated profit target, but it shot above there, and we have explosive trend strength. This is our trend explosion system in action. You buy the next pullback trade, even if you missed that first 70 pip move up, you buy this pullback right here and you made about 30 pips there. You may not have bought this pullback because the strength in the last wave up wasn't that much, but usually trends continue until they get to the upper containment band if it's in the direction of the weekly and monthly trend. Another one that became strong around 6 was in New Zealand. Its weekly and monthly trend was up, so you could have also looked for buys in the New Zealand yen. Here's 6 o'clock. Again, the weekly and monthly trend's down. This is hitting the lower containment band without that much statistical weakness. That trade in and of itself usually works, and most of the time the market retraces back to the hourly. So this wasn't very explosive trend, but you could have made 15-20 pips on that one pretty easily. I'm just going to now go through some of our other currencies and show the trades. The euro dollar exploded up yesterday. The weekly and monthly trends up, the daily trends up. It pulled back and it was underneath this fib level. So until it breaks above this fib level, which is likely to be a massive selling area, once it breaks through there, that usually causes stops to get hit, and the previous day's trend continues. And usually, again, they usually stall at the upper containment band. This one had extreme strength, so you might have just tightened your stop. When it gets above the upper containment band, it's usually a good idea to exit your trade. The weekly and monthly trend's up, so not many people would have anticipated such a big drop. And then you have the Elliott two-way fib pullback trade here that didn't work. When the market hits the first or second fib target and goes sideways, breaks out, you go long. It went sideways for about 40 minutes. And also note that the incredible weakness on the way down may have convinced you not to get in this trade. Once price breaks underneath the hourly after hitting it once, usually trend goes down, so I would have sold here. That trade only fell about 25 pips and went sideways. And because the longer term trend's up and it broke back above the hourly, you bought this breakout right here, which didn't really lead to too much. It went from about 76 all the way up to 05, 25 pip move. And notice it wasn't really quite that statistically strong, so you might have got out of that trade. And because, again, it didn't go up to the high, and nor did it even come close to hitting the high or make a higher high, when it breaks down underneath the hourly again here, this fib level, once broken, acts as support, and once broken again tends to likely give you a nice move down. It hit our trading zone at 16, so you might have made about 30 pips on that sell. Those are the only good trades I see on this chart. Pound dollar daily, weekly, monthly trends up and has a narrow range pattern. You might have bought this breakout here when it went above 80 or 58.50, went up to 65, more than enough to move your stop to break even. The longer term trends up. You might have got into another trade right here. You might have made 5 or 10 on the first trade, got in here, lost 5. And usually when currencies are this choppy and there's no statistical momentum, you really wouldn't have even focused on the pound. It's possible that the pound might be slightly strong and the dollar slightly strong, or the pound slightly weak and the dollar slightly weak. You'd have been better off trading the pound when it shows incredible strength, but not just the entire day. People that just trade one currency all day typically run into problems. Earlier today, you can see a little bit of weakness, mild strength, a little bit of weakness, and then at 4 o'clock it really became strong. But the dollar was strong too, so you really didn't want to trade two strong pairs against each other. That's why earlier we showed the pound yen. And also note that the Australian weekly monthly trends down, the real-time trends down. You would have had a much easier time buying the pound versus the Australian. Let's go over that currency. Here's the pound Australian as we load the charts. Notice it's above the hourly moving average, and it's really going sideways for quite a while. It breaks out right here. Our software showed it, and you can see the price went up 50, 100 or so pips. Notice the trend explosion intensity. You buy that little pullback. The daily, weekly, monthly trend are off the charts strong, the darkest green you can get. Usually you never want to buy above the upper containment band. This one's just slightly above it, and it's probably the longest or the strongest weekly and monthly trend of all the currencies. So if you're going to buy the absolute strongest currencies, occasionally you can break the rule. I'd be very careful. I probably would have got out half here when it went sideways, and then it worked its way up here, and you made about 70 pips on the second half. But using the currency meter, it really helps you avoid the choppy pairs. Again, let's show the pound dollar. Extreme chop because they were both strong or weak at the same time with very mild pound strength earlier. When the pound had incredible strength, so did the dollar. And this is what happens. You're going to get smacked around if you trade. From number one, if you don't have our tools, you're probably going to try to trade the pound dollar and lose money on days like this. When you could just much more easily be trading pairs like the pound Australian and catch these 50, 100 pip moves. I mean, it's up to you. If you want to be frustrated and lose money by trading currencies you have no business trading, be my guest. So some of the other ones, let's go over. Dollar Swiss, the monthly trend and weekly trend are up for the most part. When this broke above the hourly, you might have went in here, got a loss, got in again here. It went from 48 up to 64. So you might have made 5 or 6 pips there. It barely made a higher high, and most of the day yesterday was underneath the hourly. So when it breaks down here, you want to go short. These are your profit targets down here. And because of this incredible intensity, you might have been looking for this sideways range if it broke underneath that low to go short, but it didn't. Came up here and hit the hourly. It never really broke down. And this fib level up here, anytime this gets hit without that much statistical strength, in a perfect world, the weekly monthly trend was down. Would have been down. You'd be looking to sell up here. Anytime an area gets hit many times and it can't break it, you're likely to get a pretty decent sized move down. And again, because of the trend intensity here, you might have gone short right here, and that trade failed. Every once in a while, the trend explosion is going to give you a signal that doesn't work, obviously. Dollar CAD, the weekly and monthly trends down. So, when it hit this level right here, I might have gone short, had a loss, got short again here because it's the fib target of this wave right here, and it's also the Fibonacci retracement level. It's above the upper containment band. This one pulled back about 15 pips, and you're not going to take this pullback because the weekly and monthly trends down and the first wave up wasn't that strong. However, because the longer term trends down, you certainly can look for sells way above the upper containment band. Now, most of the time I never sell a currency that's this strong, so I would have missed this first 20 pip move. But when it came up there and double top, this is a perfect, absolutely textbook perfect example of a double top with divergence. It made a double top. It's way above our upper containment band. It's at probably a 62% fib retracement on a longer term chart. There's a monthly pivot level there as well, and the strength is half or less than half of what it was before. So, on a tick chart, you might have gone short here around 99.65, and usually your hourly moving average, which is right here, is your profit target, and it pulled back about 40 pips. And because of the incredible intensity on the way down, because the weekly and monthly trend are down again, on this next move up right here, which by the way has less strength than the weakness, you go short and you catch another 40 pip drop. So, I would have had a loss here, small win. I wouldn't have taken this trade because of the intensity, and if the monthly trend wasn't so far down, it wasn't above the upper containment band, the previous example showed the daily, weekly, monthly trend, the strongest one of all. This one's not. The weekly trend's down, so you're not going to want to take a shot at buying it above the upper containment band. You could have made 20 pips there, but when it is above the upper containment band, the longer term trend's down, it's likely to pull back, and that's what happens. Once the upwards momentum runs out, you sell, you make great money trading against today's intraday trend. If I told you what's the trend on this, well, you'd say the trend's up, but the longer term trend is clearly down. So you got to know your time frame trends. It's perfectly okay to trade against the longer term trend, but usually you're going to make less pips doing so, maybe 10, 15, 20, or 30 max usually, and expect and wait for it, stalk it, wait for the momentum to slow down, and then look for sells in the direction of the longer term trend. And this pullback trade right here is a great one as well. So there's two great trades going in the direction of the longer term trend. This one has kind of a mixed longer term trend. It's not that strong. The price is underneath the hourly, and yesterday it went up and didn't have that much strength. When it couldn't get above this fib level and broke down right here, you might have gone short or waited for the low of here to get broken, and it just absolutely collapsed. You would have been looking at possibly getting out here or here or here, but it just shot through all those support areas. Anytime it's underneath the lower containment band, be very careful. The first sign of it stalling, get out. And you probably made 50 or 60 pips on this. Again, trend explosion system, not all of them worked. As I showed earlier, there was a losing trade, but this one, you draw your trend line underneath the lows, or when the IntelliTrend color bars turn red, you go short again because of the extreme weakness here. Daily, weekly, monthly trends down. It's right near the upper or lower containment band. It's not too far underneath there. I usually won't buy or sell 25, 30 pips beyond there, but this one is price is 99.07, and the containment band's only 10 pips above it. So you're not risking much. Plus you got a lot of resistance above. If it went your way and came back up here, it's likely to stall at this resistance and then continue. So that improves your odds too. Anytime you can buy or sell right near a major support resistance area. This is a good example of, you might have considered looking for sells here at the hourly when it broke down underneath there, came back up to all this resistance area. Keep in mind the weekly and monthly trends up. So anytime it goes to or below the lower containment band, look, it went right to my fib level. I do every night, and we have a double bottom with divergence here in the direction of the longer term trend. This is a great trade. It's against today's trend, but it is in the direction of the longer term trend, and it picked up about 40 or 50 pips. You also might have sold this narrow range breakdown right here. This was the potential profit target. So was this, so was this, so was this, so was this. Anytime they shoot through them all, especially when they're below the lower containment band, you get out. That's good for about 25 pips. Because of the trend explosion here, you might have sold this next move up. Again, good for about 20 pips. So you might have sold here. I wouldn't have bought here because of the incredible weakness. You got short here and then bought here with a double bottom at a fib level. Anytime you have a double bottom, it's higher probability. This one, the longer term trends up, so when it broke underneath the hourly, went sideways and broke back above it, you might have went long. This is your first profit target, this is your second. Went right to the upper containment band, didn't have off the chart strength, so you would have got out of your trade here. I might have bought this first pullback hoping it would go higher, but it didn't. And after that, I don't see any reason to take any of these trades. Wait for higher highs as a sign of strength in those currencies that don't have that much momentum. This is a good example of trend explosion in the direction of the longer term trend. You buy that pullback, you might have made 15 or 20 pips. You might have bought this next pullback. That one really didn't pan out. You maybe made 5 pips. I wouldn't have looked to sell up here because the longer term trend's up. And when it came down and held support at the hourly, notice how many times the hourly hit and the market bounces off of it. Because the longer term trend's up, it comes down, holds the hourly here. I might have went long right here when the bar went green and it broke out and got out of that trade right here. So that's good for about 30 pips. This one, the weekly trend's down, the monthly trend's slightly up. Came up to this resistance area and no strength. You might have sold there. I'm not sure if I would have sold here because I would have expected the fib to hold. But once it dropped here, again, trend explosion system, it pulls back up. I would have went short right here. This is my profit target. Maybe only made 15 pips. And I wouldn't have looked to buy down there because the longer term trend's down. It's not as likely to give you too much profit, and it didn't. This one's a weekly, monthly trends up, so anytime it hits the lower containment band without that much weakness, or you see the weakness getting less and less, pretty decent trade here and out. That's about the only trade I see worth taking in this one. The longer term trends down. You might have gone short right here up into this fib level as support, came down, hit the lower containment band without that much weakness. I'm not going to buy this one. And after this trend explosion system, you might have bought this pullback, made about 10 pips. It really has a mixed trend right here. I don't see any trades that I personally would have taken on this one. In this one, the weekly trend's moderately down, the monthly trend's up. We are underneath the hourly, so it's more likely to go down, and we're underneath the previous day's low. So when it comes up here and can't break it, decent short right here. Look at the trend explosion. You might have sold right here where this is your profit target, made another 20. The longer term trend's down. I primarily use the weekly, so I'm not looking to buy here. I would have missed that move up. And because of the incredible strength on the way up, I wouldn't have sold here even though the trade worked. And it's really stuck between two fib levels. So And this last move down here had incredible weakness. If it didn't, you might have looked to buy there at the double bottom. And when it finally breaks back above the high of the day and above yesterday's low, that's a good place to get in. Notice you have a clean ride right up to the next resistance area here at 77. Good for 27 pips. That's a pretty high probability trade, and that worked.